Good evening, traders. Today is Friday, December 16th. Later in the evening, markets have been closed for some time now. Had a rough week, didn't we? Ended up pretty red, I would say. We gapped down twice this week, right? Right over here. You know, kind of what a way to cap off the week to basically close the gap that we left earlier, right? From remember, this all started with the November CPI, right? Here's one caveat, though. One minor detail that I left out. What you're looking at is actually not December 2022. What you are looking at is actually December 2021, a year ago. You're like, what are you talking about? This is the exact pattern that played out a year ago. This week last year, major move down. 2 gap downs consecutively to finish closing or almost ending up where you started from. But how would you like to know how that next week ended? Well, why don't we have a look? Mega Santa Rally. That's exactly how that ended last year. This data point right here, this green hammer, which would be the same thing down here, is, was, since this is last year, Monday, December 20th, 2021, this green hammer. This coming Monday will be December 19th, 2022. So let us see what will become of this coming week. Okay, today's video is going to be jam-packed, loaded with a lot of food for thought for you guys to ponder over the weekend. I'm going to show you the MACD configurations, not between the March peak and the August peak, but between the December-January 2021 peak and today's, if you want to call it a peak. Okay? I'm also going to show you why I know now that the markets think the Fed is bluffing with those projected future rate hikes that Jay Powell came out with this week. Remember the projected 3-year rate hike through 2025? Markets think he is bluffing. Okay, and I'm also going to show you the a good way to handle this morning's head fake. Remember the surge, pump, and dump we got? Okay, well, I'm going to show you how to use the RSI to see the divergence there, and then how to play that in the future, how to avoid getting head faked. And then finally, I'm going to show you what I think that we have bottom today. We did bottom today because we have divergence between the MACD line and the signal line on the 1-hour MACD. And that signals the bottom. Okay, so now this is still December 2021. Okay, as you just saw a moment ago. And now I'm going to steal my own thunder and show you December 2022. Look at that. 2 gap downs. Major down, consecutive down days, just like last year. Ending up almost where you started, just like last year. Okay? So, what will come next week? Everybody wants to know the answer to that, right? What's going to come next week? Now, there are already some hints, as I pointed out in this morning's video. We've got the notch, and that's on the 1-hour MACD. We have the notch, and In the final hour of trading today, which you're going to see a little bit more of a little bit later on the slides, we have divergence between the 1 hour MACD line and the signal line. It is separating, okay? And that is always a good sign, okay? All right, this is some good stuff here. Now, here's the December-January peak, March 29th peak, August 16th peak, and then here we are today. Here's the June 16th low, and there's the blue line, right? October 13th low, blue line. All the other ones are red to designate the peak. Now, why I think today's, if you want to call it a peak, does not compare to either March or August from a MACD perspective. It's because when you look at March, look at where March started from, way down here. Came up past the zero line, right? So half of the distance of that whole leg up is already consumed by the zero line. See that? Okay. Came up, and then obviously we now know it collapsed even lower than where it started. Okay? August, same deal. They had to come up from a significantly lower spot. Half of the entire length of the ascending side is consumed by just getting to the zero line, right? We can all agree to that. See that? Half of it right there. So we all know now that collapsed all the way down, retracing 100% or actually more of the starting point here, right? We can all agree to that. Both March and August retraced 100%, at least 100% of its starting point. If you're talking Fibonacci, okay? And actually March retraced more than 100%. Okay, it went even lower than the starting point. Okay. October, I'm sorry, December. Well, we'll just say October through December. The starting point for this, I would argue, is at the zero line, not way down here. Okay? It's at the zero line because it took October 13th all the way until, you know, November something. November 1st. We'll just call it November 1st here. To get to the zero line and create and flatten out right there. So this starting point is the zero line. And the ending point is right there, almost at the zero line. Let's compare this to January. Here, where your starting points are at the zero line. See what I'm saying? It's a totally different comparison. There's no comparison between March and August compared to today. That's what I'm saying. Now, I'm going to mention it for now. I just want you to just tuck it away in your mental bank. That 1 hour MACD that I'm going to show you a little bit later. That 1 hour MACD separation from the signal line. You keep that up. If you keep on separating and you keep on going back to the zero line, that's going to flatten out the 4 hour MACD. And the 4 hour MACD, all it needs is a couple bars of that to start to flatten out the daily MACD. And you flatten out at or at the same level, which is at the zero line, right? That's still bullish. That's not bearish. Okay? I want to call your attention to something. See this big move right here, right? See that? Would you say that this move right here, this big down move, it's about the same length as this move here, right? Comparable. This one actually, I can argue, is actually more vertical than this one, right? We can agree to that. We'll just say it's the same length. Look at that leg down, corresponding. That length and that corresponding leg down. That length is not the same corresponding leg down, is it? This is shorter and curvier, if that's a word, than this. Are you following me? Okay, so I'm already drawing distinctions between huge falls, huge legs down, but yet we're not at a big leg down yet, despite similar length of uh, price loss. Okay, so I'm just going to point that out. Now, this is January. I'm sorry, December. December into January. Look at that. How the daily MACD always stays at the zero line, bounces off of it, creates a little notch, goes up again. You'll notice that's very similar to this. Very similar. Maybe you can call this a big notch. Okay, maybe. Now, so I would say this MACD pattern near the zero line is more similar to the December-January pattern, not these patterns all year long. Not the same. Therefore, I would not use either of these peaks as comparison. You need to use the December-January peak, 2021 going into 2022, as a comparison. Because why not? We're talking about Santa Rally. Go back to Santa Claus of last year and see what Santa Claus had to say. Right? That's all the more reason. Okay, now, here is what to look for by way of divergence. How you know, uh-oh, it's going to crash. This is the Santa Rally. Look at that. Up, 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 up. Here's the Santa Rally that started right there. Right there. Made an even higher high than the previous one. So clearly that price is going up. MACD, however, going down. Right now, we don't have that second hump to compare to. We need a second hump to validate if this is really going to follow the same pattern as this one. So I could argue that this big hump is equivalent to this one, or something, or we need another hump to establish divergence. That's typically what you need. You need two humps. One hump's not enough, right? You can't tell. Because if you looked at this, if you want to call this a hump, I don't call that a hump. I just call that a notch. There's no divergence here. See, that's going up, and so is that. Right? That's not divergence. I mean, that's going down, and so is that. Right? So there's no divergence here. We need another hump, and that hump can only be created by a rally. So that's what we need to happen. And I would expect if this is a rip your face off rally, rip your face off Santa rally, the second hump will be smaller, but the price action will go higher, like a lot higher, just like this did. Totally unexpected last year after gapping down. Everything's going to come to an end, but then it ripped the other way. So, okay. So, this next slide is essentially the same slide, except for I included a lot more of 2021 data right here. As you will see that? 2021 MACD daily consistently stayed above the zero line all year long, except for late in the fall. We started to see some, shall we say, cracks in the armor, right? But you see, this obviously is a bull market because the daily MACD lows are still at or above the zero line. See that? Right up until the end. Right up until the end. Here's January. Sayonara. Down, down, down we go. Okay? But look where we are again, guys. See that? Up here. I mean, like I said, you know, I guess it's always possible that this just keeps going down, 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 down. But until I actually see it crossing the zero line and going down, which would then kind of confirm that that pattern is more indicative of like something like this, I'm more inclined to think that this is like January, because this notch right here, this is the starting point for the it was November, yeah, November 10th CPI. This was the launching pad. Zero was the launching pad for November 10th CPI, not coming down from the negatives like June through August did. See that? June through August just came from the deep depths of negative to the zero line and just kept on going, only to fall all the way back down. But I'm making a distinction that this starting point is at the zero line, not down here from the negative. See? So, very nuanced interpretation of this, but I believe this is closer to December, January 2021. All right, so that's all I wanted to show you, just so you guys can see, like, yeah, that looks like a bull market there because the lows on the MACD daily don't ever go into the negative. That's why it's a bull market. See what I'm saying? So, okay. Here, this article is where the markets are calling the Fed's bluff, right? Remember the Fed came out with the projection by 2023 year end, 5.1%, right? However, this article points out factually that the 2-year U.S. Treasury yield is currently at 4.25%. However, the Fed funds rate is currently higher than that at 4.38%. That is why the markets are calling the Fed's bluff, because they're like, the rate is supposed to be 4.25. You're already at 4.38, and you're talking about going to 5.1. No, no, 5.1 is not realistic. 4.25 and falling to about 4.25. It's going to keep falling. So what are you talking about raising rates? That doesn't make sense. A couple of nights ago, I actually said the same thing. I'm like, man, I think the market's going to call their bluff. I said that on a video because yeah, see, okay, I mean the Fed is going to either pause from here or even cut them because it doesn't make sense. You have 2 consecutive months of decreasing CPI, and now you have the 2-year Treasury yield falling to about 4.25% today, lower than the current Fed funds rate of 4.38. What are you talking about increasing interest rates for? See? So, there you have it. Wanted to point that out. Okay, let's get on to the RSI divergence and how to avoid head fakes. Okay, we all know what happened this morning, guys. The first 5, 10, 15, 20, 25 minutes looked like it was going up, only to collapse. Okay, so this is the 5-minute chart. It's actually quite rather simple. You must wait 20 to 25 minutes because these are 5-minute candles. Wait for confirmation. And what am I talking about? Point 1. This is candle 1. This is RSI point 1. This is candle 2, red candle 2. RSI point 2, right? So up, down. Okay, that makes sense. There's no divergence there. But look at between point 2 to 3 on the RSI. That's a relatively short distance, shorter than point 1 is, right? We can agree to that. 3 is shorter than 1. However, price 3 is taller than 1. You have bearish divergence on the RSI. Essentially, you have to wait for, so candle number 2 is the first back test. This candle, green candle number 3, is the next leg move up. But you will see that RSI does not follow it reciprocally or proportionately. Now that's a better word. Proportionately, right? 3 is taller than 1 on price, but 3 is shorter than 1 on the RSI. That's it. It's going to fall. You have negative divergence. You have bearish divergence. That's a head fake, right? If on the RSI, if 3 was taller than 1, just like the price 3 is taller than 1, you're good. You could probably get in on calls like right there. It's going to keep going up. Okay, so that's actually it. That's how you not fall for the head fake. But you gotta wait 5, 10, 15, 20, right? I mean, this looks too good too. I mean, look at that. Look at that big wick up. Look at that green can. I mean, that looks like picture perfect. Like, oh yeah, it's gonna go up. But if you want to call that candle number 4 that I don't have numbered, this is RSI point number 4. That's still lower than 1. Okay, right? Because in fact, 4 is even higher than 3, and 3 is even higher than 1. So, yeah, had you waited, you're like, oh yeah, oh no, I'm not buying this. In fact, you could probably use that to short. You're like, no, I see divergence here. I'm going to short it, right? Get a quick scalp trade down here. Okay, so that's all I wanted to point out about that. Let me know if you have any questions about that. Okay, this next slide is, it on the surface you would think, oh, what's the big deal? We just like we pump and dumped, head faked in the morning, and then we were flat until the final hour of the afternoon, which is true, which is a true summary of how to describe how the day went. However, okay, now, so here's the divergence that I was just talking about right there. There's the blue bar going up. Uh-oh, RSI going down. Okay, so this is the 5-minute chart right here. 5, and here's the 30. Here's the 65. Now, let's get to, okay. So the divergence already is a big, huge hint that this back test is going to fail. And it did. It did. There's another way to also to know the back test is going to fail is when on this the 5-minute chart, when the MACD red line here both crosses the signal line and the 0, that's it. That's curtains. You're done. 100%. You're done. You're going to lose this. And that's exactly what happened. Okay? So you can look at the MACD line not only crossing below the green signal line, but also crossing below the 0 line. That's it. You're done. You're done. Okay? So, now, I want to get to an important point. This is actually quite key. And I had to take the screenshot that you're looking at right now at that moment. Because if I'd have just waited, I'll just wait to the end of the day to get the screenshot. It's tougher to see. So you have to see it in that very moment. And that's why I took the screenshot that you're looking at right now. And that is predicting the bottom. Remember, it's been falling for a couple days. Oh, well, yesterday it fell. The day before was the FOMC rate decision. Okay, so like, how would you know it's this one and not this one, right? Right? Or not, that one, right? How would you know that? Okay, this is a key observation that I made today. That's why I was like, oh, I got to take a screenshot of this. Okay, notice this is the 5 minutes chart. I can tell you that even yesterday, because I was staring at it all day yesterday, just by looking at this ascending MACD line right here, knowing what I know now, this will not be the one that eclipses the EMA 50 line right here. If your starting point is too far below the zero line, if you're starting like here's the takeoff point right here. See that? Here's where it starts to separate and take off. That's too far below it. You're not gonna make it. You're already spending too much energy. See, like this, like in this example, like see how you're starting from way down here, and you well, you can forget about getting to the zero line. You can't even get back to your signal line. That's why you keep getting rejected by even the SMA 20 line. See that? You're getting rejected by the SMA. You could forget about the all-important EMA 50. You're getting rejected by the SMA. And that's because you're getting rejected by your own signal line down here. The ultimate line you want is the zero line, which is equivalent to the EMA 50 line up there. See what I'm saying? So you're just too weak right here. Now, having said that, so basically when you're below the zero line, the green signal line is equivalent to the SMA 20 line. You can't even get by this guy. Forget about even thinking about trying to take over the EMA 50. But at this point right here, it does. This point right here. Here's why. It's because your takeoff point is precisely right here. And look at how close you are to the zero line. When your takeoff point is that close to the zero line, you are ready to retake the EMA 50 and reclaim it. Okay, so that is very, very important. It depends on your takeoff point relative to the zero line. In this case, it's right there. You're right there. See that? Your takeoff point is right here. Of course, you could take it over, right? And it did. It did. You guys probably saw that in the final hour. Now, so this is important point number one right here. Your takeoff point relative to the EMA, the MACD zero line. Okay? Proximity to the zero line must be right there. And you will find that when you are in this scenario where your proximity to the zero line is so close, that's when on the RSI you actually pierce the green 70 line. You can actually successfully pierce it. Okay? So that's another key observation. Okay? At the same time, on the 30-minute, you are now touching the green line. It means you are ready to pierce. You are ready to pierce the EMA 50 line. Right? Right there. Okay? Now, see that? See how the 30-minute starting to curl up? See that's all good. It's all good stuff. Now, this is also key. This is equally important on the 1 hour chart, the 65-minute or 1 hour chart. This concept I'm about to describe for you is equally important as this proximity concept I just mentioned. And that is this. The moment, this is the 1 hour MACD, the moment the red line, let me just zoom in. I know you can see it, but I'll just zoom in a little bit more. Here we go. Here we go. The moment the red line starts to curl up and you no longer see daylight between the signal line and the red line because it's curling up and you no longer see daylight, that's when you know it's time. You're at the bottom. For example, you see this? You see daylight, right? You see daylight. Okay? Now this here, this was FOMC when Jay Powell announced that fake interest rate schedule for the next 3 years. Okay, so that's how you know you're at the bottom. It is now starting to curl up. You no longer see daylight between the signal line and the red MACD line. And equally important down here on the RSI on the 65-minute is this. The moment on the this is the negative, this is the 30? Yeah, 30 line. Yeah, that's right, 30 line. I was watching this thing all day like a hawk. All day. It was, while the markets, as you guys know, basically was kind of going down all day. The 65-minute RSI wasn't going down. As a matter of fact, it was making higher lows. See that? Making higher lows. And it was hanging right there at that 30 line all day. I just sat there and stared at this all day. I'm like, what are you doing? You're just hanging right there like you're consolidating just beneath that 30 line. See, making higher lows, coming up, and you just stayed right there. You just stayed right there. But the moment the EMA 50 was taken, this 30 red line was pierced. I saw it. Okay? It was pierced. And here's the next slide, because I'm going to show you at the end of the day what it looked like right here. See? It was pierced and it beelined straight up like that. See? That's at the end of the day. But this was the moment that the EMA 50 right here was about to be taken over. Okay? So yeah, that's what I wanted to show you. See, if I'd have shown you just like this already, by the end of the day, it's harder to recognize. You're like, well, okay, see that? Just at the end of the day, you now have separation on the 1 hour MACD. See that? Separation between the red MACD line and the signal line. Okay, so that's all critically important to confirm bottoms. Okay, so don't forget about proximity to the zero line, where your launch point is. Okay, and then where there is no more daylight on the 65-minute MACD as it starts to curl up. That's how you know it's ready. It's ready to reverse the trend. Okay? So, this is SPY Daily. Okay. Okay. Want to call your attention to, there's the daily MACD right here. At this point, it is 0.71. That's your launching point, right? The red line, 0.71. Today, it is still at 0.90, guys. Still at 0.9. That's, as you know, obviously, that's higher than 0.71. Even though visually you're like, oh, that's pretty close. That's pretty close. But that is at 0.90, and your launch point was 0.71. But as you just saw, if the 1 hour MACD, which you saw separate, and that trend continues starting Sunday night futures going into Monday pre-markets and maybe even all Monday, right? As the hours go by, as the hours go by, as the hours go by, and that separation keeps happening, well, that's going to flatten out. The 4-hour chart, which is right here, right? That's just going to start to flatten out. And all you need is 2 of these 4-hour candles to represent a daily chart, and that's going to start to flatten out. That very much could still flatten out above the 0 line. And now you have a very similar look to what happened in December, January that I showed initially. You see what I'm saying? So what happened in the final hour of trading today has to happen in order for the MACD on the 4-hour time frames and on the daily time frames to flatten out, ideally at or above the 0 line right here. Okay? All those things have to happen for a rally to even be considered, right? If we find on Sunday night that that separation somehow gets closed or comes back together and the MACD loses momentum, then that's very problematic for a rally. Okay? But I will tell you, on a 1-hour MACD, once we see separation, we don't see it closing back. I Once you get separation, it's gonna run for a while, like a couple days. Okay, so we'll see. So far in the final hour, the thing that it had to do, it's doing. Okay, so I mean, you guys saw that final surge kind of towards the end there. So we'll see. We'll see. So that is all that I've got for you guys today. Please follow me on Twitter for real-time tweets, where I tend to tweet things intraday. And if you like the video, please give it a like, share, subscribe, or click to be notified. And with that, that is all I've got for you guys today. Agent 000 signing off.